Welcome back, you beautiful retail investors. I'm your host, Bill Steele, and I am joined by Mike.
Love the sound on.
Got my co-host,
But Mosh,
Bamash Sharif with me today, you guys. We're going to be jumping right into why the stock market looks so red today, why it seems like it's crashing, what is going on in the market, who really knows. And we also have some really interesting, maybe semi quick, smooth brain DD on what looks to be very promising I've gotten from Binmash. But without further ado, guys, let's get right into some of the charts. And here we are. All right, Omar, I will let you hop right into it, brother.
STPK was just left on there.
What do you want? Who do you want to get on?
Been dead with STPK. Was there any charts that you want to check out? First part, GameStat.
Yeah, so game, sure.
I'm a huge bag holder on STPK.
There we go.
Long on that one. Stefano's got the right idea.
Here, come on, I'll let you on.
That ridiculous crash, man.
Yeah. So overall, I would say there's a couple different reasons why we're looking at why the market overall is so red. I don't know if you guys are looking over here on the left.
Dead.
Yeah, our watch list here is on fire, to say the least, and in the not so good way. There's a couple different reasons. The sentiment, the trader sentiment and institution sentiment, there's a lot of, let me start here. There's a theory, which could be pretty safely assumed, with a little bit of salt, that the reason things are looking so terrible is because big institutions are pulling out of their insane plays and insane style of being in the market, taking incredible short positions. It has a lot to do with money being moved and market correction is the correct term. The correct slogan would be correction. And Omar, I'll let you talk a little bit more about what is going on. What happens with a market correction? Like, why does a market correct? Why there's ebbs and flows in the market, and a little bit to do with how bond prices and treasury yields do that.
Yeah, man. So with the vaccine and everything that's come through, and the inflation rates going up, I wasn't expecting this crazy dip, the double dip, to happen.
Yeah.
And I'm leveraged out.
Yeah, I feel that. Yeah. So the big thing to note about what happens during a correction is of course, people get in, the best. Let me retract. If you guys didn't watch our live stream going over Jerome Powell and Yellen and what they're doing over there at the Fed, the relationship between bond yield, essentially bond yields, interest rates, treasury interest rates, and the stock market have always kind of been a way that individuals determine why market does what it does. Of course, no one can objectively say, unless there is a significantly massive catalyst, like in the instance of the housing bubble in 2008 or the dot-com bubble in the 2000s, no one can really say why things happen definitively. We can say right now, the speculation in public, a lot of hypothesis being tossed around is that there's a market correction due to institutions moving money, and again having to play the game a little bit differently with how the retail investor has changed that landscape.
It seems like every time the congressional hearing, every time they come and talk, the market just keeps dipping. So
Yeah.
they need to stop talking.
Yeah.
That'd be the best way to go about it.
Yep. And so we're going to move over to you want to go into a little bit on that DD?
Yeah,
That-
open up the PSLV. With everything that's been going on, I've been trying to hedge personally my positions, and I feel like precious metals are a very, very good way to do that. Lithium, silver, these are things that are going to be used for a lot of the way tech is kind of going towards the clean energy, going green,
Yeah.
everything. So this particular Reddit post really, really piqued my interest.
Yeah, definitely. So one thing to note, you guys, is uh, the current digital age we live in requires a lot of rare earth minerals. It requires certain particular commodities. One of them being like lithium ion batteries is a huge one. So the rare earth mineral, the rare earth metal lithium is a big. It's a big deal. It's what charges batteries. It's what charges all of these, new electric vehicles. It's what is used in phones. I mean, the list goes on and on in terms of what the applications of lithium ion technologies is. And also in this instance, we're looking at the silver market. So I hope that I've already posted DD, blah blah blah. I hope GME hits 1,000 after earnings. Didn't happen for those who weren't looking. Silver, however, is a market that I have done the research most on. That's why he's writing DD.
And a little short note about this particular article, something really weird occurred. They took it off initially. Yeah.
I mean,
yeah, like they removed it. Reddit did.
Oh wow, Reddit
Yeah,
removed this
they
post.
removed it, and then like a day later, it came back, which was very, very odd, and it got me a lot more interested.
I wonder why they did that.
Hmm.
But we got the Too Long Didn't Read by PSLV, and then get ready to ride the silver rocket
Silver
ship.
rocket ship.
I like that. Alternatively, purchase 1,000 ounces, 1,000-ounce bars of silver at premiums
Hey.
under 5% to ride the
If
rocket.
you could get the metal, like physically, that's the best way to go about it. But what this unpacks is the second best option.
I have been also seeing a lot of comments from you guys. Again, if you guys are watching, give us a like, share some love.
Show the love.
Hit the subscribe button. We're trying to bring you guys relevant information in real time. But yeah, there's been a lot of comments that we've been getting from you guys about silver. Stefano M LOD ticker symbol LODE is my pick regarding silver gold lithium. Great company with huge potential ahead. Do some DD when you have the spare time.
Absolutely.
We'll definitely put that on the watch list.
Thanks,
Thank you, Stefano. Let's see here. Quick bullet. Silver will rise dramatically due to fundamentals based rally in industry and monetary demand. Yes. A short squeeze in silver is the precipice of could add gasoline to bonfire. Current short interest is 513%.
Yeah,
My
I saw that and
goodness.
I was like,
What
whoa.
the heck?
Yeah, man.
That's crazy.
Yeah.
SLV is a scam. If you own it, then sell and purchase PSLV. Same goes for GLD. You can buy PHYS instead.
And as we go into this, we'll see exactly why certain securities are a scam, and it's kind of mind blowing. And I've been trying to show Bill this, and he's been so busy, so I'm kind of excited because we get to
That's
see
the
his
first time I
reaction.
get to see this.
We get to see his reaction live because I know he's gonna love this. So let's get into it.
The banks that run the silver market have been labeled criminal enterprises by the Department of Justice for metal price manipulation. These same banks entrusted, and these are the same banks entrusted with SLV, SIVR.
Goldman Sachs.
At first sight, the chart can be scary, but they have parented technology. Interesting, Stefano. There are two types of bull markets in silver. One is fundamental based, where silver is undervalued relative to industry and monetary demand. The second type of silver market is a bull. Oh, froze with that. Both types of bull markets have occurred at different points in the past 60 years. However, in 71 to 80, the price of silver increased over 30 times. A combination of bull markets. Holy crap. Yeah. I believe we may be entering another silver bull market like the one that began in the fall of 1971. Well, I'm a huge 70s fan, so I'm totally behind this. Where both a short squeeze and fundamental-based rally occur simultaneously. Dude, I gotta give my grandpa a call. He likes to collect those silver half dollars.
Oh, this might be the time to
Just,
call him.
just call grandpa up and get him to melt some stuff down, take a blowtorch over to him. So what are the smoke alarms I mentioned? I recently went digging through various data. I like this guy's tone. I ended up creating an indicator that I like to call SMOAG. I pronounce
Smoke alarms. I
Smoke.
love it.
Smoke. Let's look at the money supply relative to economy and GDP. More specifically, if you look at the chart below, the ratio of M3 monthly from 1960 to 2020. Whew, my goodness.
Yeah.
That's just a big yeah, money printer really do go burr. When the ratio is rising, it means that the broad money supply is increasing faster than the economy. Yes, the printer's going burr. We're very aware of this. Enter the smoke indicator. Smoke indicator tells you when silver is generationally undervalued and sets off a smoke alarm that is a signal to start buying. Below you see the chart of the smoke. The SMOC indicator is calculated by dividing the monthly price of silver by the ratio above. Okay, M3 divided by GDP. I could see that. I could see that. Let's see what's driving the more specifically LN silver price and divided by the smoke factor. Below you will see a chart of the smoke level from 65 to 2021. Let's see what happened in the 70s. Interesting. So I got a little dip ski and then 75, dude.
Yeah.
That's huge. That doubles more than just about damn near doubles. Okay. Another one here. And we get some leveling, cool off. Okay. I want to bring your attention to the blue long-term trend line for smoke. Yes. Someone needs to call the Boggs or give Vlad a call. Well, fortunate for you guys, Putin's an old high school friend of mine. I'll give him a ring and see what's going on. Tell him to bump it. Keyboard and bump it.
Tell him to pump it.
Yeah. Since 1965, smoke has only been touched like 3 times. Okay, cool. Venezuela stock market. I'm not even gonna look at that. Smog level. Okay, he's talking about this level. An increase of 3.4 points from bottom in April of 2020 would mean a silver price of over $500 an ounce before this decade is out. There's really no reason it must stop there. Yeah, but that's everyone's optimism. Inflation price. Inflation expecting to show certain rates. Yes. So the formula that apparently just from my rough, smooth-brained analysis, it seems that his the metric he's measuring, the smoke level doesn't seem too bad. I'm gonna definitely need to do a little bit more digging to look at the math and see if there's like actual correlation between what he's describing there. But inflation expectations are rising. Well, that's fine. Stimulus checks, higher unemployment, PPP grants. Yes. But then I agree that these programs are relevant. They're not funded. They are not funded by increased taxes. They're funded through debt and money creation financed by the Fed. Yes. That 100% is true. And that is definitely right here, you guys. This is huge. This is something you should note just in general for the exact topic of why we are here on this live stream right now. I'm going to read this paragraph out loud. Inflation expectations are rising because we are actually starting to put money into the hands of real people rather than simply adding it to bank reserves. Stimulus checks, higher unemployment benefits, child tax credit expansion, PPP grants, which, by the way, if you guys are not tracking, if you are self-employed, if you are any kind of way getting a Schedule C on your tax return, which means you're filing profit losses as a self-employed individual, check out the PPP loans available to you. I got like $2,000 today just by applying for one of my, my self-employed stuff. And these loans are not, you don't have to pay them back. So it's free money. Check out, just Google PPP loan application. If you guys aren't aware, the deadline is within the next like 7 days.
Yeah.
So there's free money there. Go check it out. And, maybe you'll toss it into a money bag over at GMB. Maybe you'll get some more popcorn. Who knows what you'll do with it? Just get some more free money. A deferral of loan payments and likely, I'm going to type in PPP real quick into the chat so you guys, PPP grants/loans.
Make sure to jump
Google
on
it
that.
if you're self-employed. Also, if you guys really want to be amazing, if you do qualify for it, hit my personal Instagram at William_E_Steele, and I can send you my link where if you do use it for a PPP loan application, I get $200. Shoot, I'll even split the hundo with you, throw it back your way as a little kickback for some more tendies. Appreciate you. Whether or not you agree with these programs, so essentially all the kind of welfare stuff we've been doing, is irrelevant. They're not funded by increased taxes. They're funded through debt and money creation financed by the Fed. Yes, so money printer. As structural unemployment remains high, I don't see these programs letting up. I agree, especially with Joe Biden in office as well. And in fact, I would be betting that further social safety net expansion is on the way. Yes, hence the Joe Biden comment that I just made. The 1.9 trillion bill was just passed, and there's rumors upcoming of an structural bill that's going to be between 3 and 4 trillion. That is why you guys are seeing that combined with what's going on with the retail investor revolution is why you're seeing the market in the state that it is in. We are experiencing a correction. Money is transferring hands. Different players are involved. New regulations are coming out. This will be probably going down in history as one of the, if not top 5 most violent periods in stock market history, day to day, even week to week, even month to month. We're going to be seeing insane things in the next 5 years, you guys. I'm talking like in the space sector, which, by the way, we definitely are right next to SpaceX. So be looking out for potentially us doing a highlight on that company, what they're doing with Starlink, how that's going to be a major disruptor in the publicly traded company marketplaces, meaning like internet companies, satellite companies, all types of stuff. But yeah, what's coming out in the space sector? What's going on with deep learning, artificial intelligence software disrupting sectors? What's going on with electric vehicles, automated systems? There's some insane things going on right now. If you guys are not tracking at the frontier of each sector, what is going on, you should definitely just take a look into it for fun's sake. It's like we're living in a science fiction reality. I mean, day to day things are changing so rapid, it's insane. Yeah, all of that, the correction is preparing for that. So we're going to see some red and we're going to see some incredible green. Where you take your position and in which company you have your faith in kind of this race to the frontiers of all of these newly expanding industries due to new technological advances is kind of the name of the game. It's kind of been the name of the game since stock markets were first created. If you can get ahead of what's going on, you can take your position, do your due diligence, and have some serious conviction on why you're picking the companies you're picking. You'll if you make the right choices, and if that smooth brain gets a little rigidy on me, you'll do well. And I hope you do make a ton of money, because that's what we're in this for, as retail investors. This is the trap the Fed finds itself in. Inflation expectations are pushing yields higher, but the nation's debt levels, public and private, have expanded so much that rising rates would crush the nation fiscally through higher interest payments. Raising rates would also likely increase unemployment in the short run during a time that unemployment is already high. So they won't raise rates. Okay, yes. He's talking about
basically what
the fakeness of money. He's talking about the notion that money isn't real, and some higher level technical
basically the
jargon.
dollar's becoming worthless.
Yeah. I would not be surprised, and this is a super early, super sketchy, almost like biblical doomsday kind of call, if we move towards a single currency that was backed by some kind of either rare earth metal, gold or silver, or whatever the case is. But I would not be surprised if all of the leading superpowers decided, hey, man, there's a big bad bomb waiting for us down the road. If we don't take care of it now, it's going to blow up so fast and so hard and so abruptly that who knows what the total amount of loss of life will be, what the impact from a global economic collapse could be. I mean, that's literally stuff that like crazy doomsday movies are made out of. the other problem with the Fed's policy is extension during times like this. It actually breeds higher structural unemployment. Yes, in the short term, unemployment isn't impacted by a shift in interest rates, and long term, interest rates decrease the number of jobs available. Yes, yes, yes. Every company would like to fire as many people as possible to cut costs and then brag about creating jobs, knowing that the decision is never about jobs, but rather, yes, they're using robotics and AI are advancing rapidly and can be used. Yeah, this is a section of what I'm talking about. Robots and AI are advancing so rapidly. The debate of the companies, et cetera, et cetera. One example of this, you guys, and I will really, really briefly go into it. If you guys have any questions, by the way, comments, concerns, statements, what tickers are you holding, what bags are you at, drop it in the comment section below. Again, be sure to like, you guys, give us that little boost in the algo. I'm going to show you probably the coolest thing that I've seen, but robotic deep fryer arm.
Oh yeah.
Flippy. That's what it's called. Dude, look at this thing. Look at this thing. And guys, this thing, Flippy. All right, I'm gonna actually type in its name. Flippy robotic arm. And I'm gonna go into actually watching it. You guys, this thing's already in use. This thing has already This thing has already like flipped thousands of burgers. like this thing has replaced some jobs. Check this out, man. This is insane. So this is what I'm talking about. This is the deep learning software combined with, advancements in technology to make manufacturing these devices cheap enough to impact sectors. Look at that, man. Your McDonald's burgers in the near future could be grilled up by a robot Bob. No longer a SpongeBob.
I am Tony Lomolino. We're at Cali Burger, Pasadena. I am going to be cooking some burgers with Flippy, and I'll be placing the beef onto the grill. These are fresh, never frozen.
Oh, man. Sounds like a Wendy's commercial.
Flippy is already detecting kind of what Flippy is seeing.
There you go.
Yeah,
yep.
So I get a warning of when he needs to move and stuff like
again,
that. So I can...
AI is using advanced recognition technologies through camera and sensors to cook your burger to the best possible temp for the best possible, product.
That's just like the simplest of jobs. As time goes on, people are going to be getting replaced very fast.
That's exactly what's going on here. Robotics and AI are rapidly evolving. Guys, the limit as to how far the disruption of AI and robotics and progression of those types of sectors will be, you really can't even predict, you guys. I studied computer science for several years in my undergraduate program, and I can just tell you from experience and tell you from what some of the industry, like super frontier leaders, are doing, and speculation on what DARPA, the Department of Advanced Research Projects agencies, and some of these like insane, super far out, government-funded programs are doing with AI. It's insane. It's really insane. And it's really exciting, but the disruption economically will be so big. I don't even think like most individuals across the world right now will be able to fathom the impact of how far-reaching this technology and all these things are. But yeah, we're gonna keep scrolling down. He talks about it. It's very true. Hopefully in the future, really quick tidbit, I would hope that the people in charge, the people in power would understand that this is very disruptive technology and that there needs to be some kind of program developed, because the need for humans to be labor assets will decrease significantly. I'm talking like in the next potential 100 to 200 years, there won't be people really doing labor intensive work any longer. We'll have such optimized technologies. We'll have such optimized technologies that are like almost universally applicable. What I mean is like essentially like AI bipedal two-handed robots that's a universal application, right? Because that's essentially what a human is. And we're going to have these super advanced technologies where humans are really just going to be sitting around on their butts all day, sitting on their hands, wondering what to do with all this time, twiddling their thumbs, and there will have to be a whole revolution socially for people to kind of understand that they really have a lot of untapped potential in them, and they could, all of us can be creators, not just of like content, not just of information, education. I'm talking like, artisans, artists, developers. The world will truly be at your fingertips in a reality where things like, simple labor tasks and your time becomes so much more abundant. You'll think less about, what's going on in the rat race, less about what to do to survive, and more about higher levels of thought, and shoot, who knows, we'll have a lot of Epictetuses and a lot of crazy cool metaphysicists emerging, and artists and painters, and it'll be exciting to see if that's the direction that policymakers and governments decide to go into, and it'll be a combination of both government and private industry deciding to make that change.
Yeah, Mochi, we won't be obsolete if we hold on to the precious metals.
That's true. Hold on to the metals, yeah.
Because none of this stuff works and runs without them.
Mm-hmm. On top of automation trend, yep, the Fed is increasing. The Fed is keeping interest rates low over long periods of time to help fix unemployment, when in reality, low interest rates exacerbate unemployment and income inequality. Yeah, maybe. The Fed's solution to the problem is contributing to making the problem larger. It looks and sounds very much like an Ouroboros type ordeal, a conundrum of the snake eating its own tail.
It's got
And-
electrolytes.
And they'll keep giving us more of the solution until the problem is fixed. Okay. All right, we're gonna continue down. He's talking a lot about inflation. I like it. He's going off. There we go. There's some valuable stuff.
Venezuela.
The 1970s ordeal is good. Now it's time to dive deeper into the other contributor to the silver bull market, the short squeeze. Okay, cool. So up here, he described what's going on in kind of a setting, which I like. And we're going to talk about the short squeeze, which is much more my speed. Hashtag GME, hashtag to the moon. There are plenty of banks talking about a commodity super cycle and a green commodity super cycle. Yes, I agree. When they upgrade metals like copper, but they never mention silver. Likely because, all right, so one thing to note about all of this, you guys. The reason why rare earth minerals and metals and all types of particularly conductive elements are valuable is because of their conductive nature. Conductivity and resistance, a majority of electrical engineering and hardware computer engineering is built on the ideas of conductivity, resistance, and these fundamental aspects that have a lot to do when you get down to the nuts and bolts with what kind of metal you're using to transmit and relay information signals. Hence why the higher the conductivity, like a superconductor like gold is, the better it is in its application towards these emerging technologies, and the fact that we're producing more of them places a greater demand on them. Scarcity becomes a factor. I mean, just all types of stuff like that. Silver's price in the futures market, and it's based on a 1,000-ounce commercial bar. A futures market allows buyers and sellers of a commodity to come to an agreement on a specific price for the amount of that commodity at a specific date in the future. Most buyers in the futures market are speculators rather than entities who actually take delivery. And so once their contract date's near, they close out their contracts and roll them over to a future date. Historically, only a tiny percentage of the longs take delivery, but the existence of this ability to take delivery is what gives these markets their legitimacy. If the right to take that delivery didn't exist, then the markets wouldn't be true for silver. Delivery is what keeps the price anchored to reality. Yes. It's kind of the nature on all that kind of speculative trading. Industrial players and large-scale investors who want to acquire large amounts of physical silver don't typically do it through the futures market. That makes sense. They instead, again, the futures market is kind of a prop market. It's all a bubble. It's all a bubble. They instead use primary dealers who operate outside of the futures market because taking delivery of futures is actually a massive pain in the ass. Okay, cool. Yes. So, most shorts in the futures market also source their silver from outside sources of exchange warehouses from the occasional times they're called to deliver. Interesting. The COMEX has an inventory of registered silver that is effectively a big pile of silver that exists as a last resort source to meet delivery demand if supply ever gets too tight. Okay, cool. So they're not doing crazy things that are illegal.
Yeah, and I found this chart very, very interesting. This is giving a breakdown of the deliveries in the first quarter of the previous year. So you got 2014, 2015, all the way up to now, 2021. And if you look at the deliveries for silver this first quarter of 2021,
Wow.
yeah. So
Wow.
that tells me a lot of big pockets are buying it up fast.
And they're making the big thing to note is that they're not rolling these things over. They're taking the delivery of the
Yeah,
silver. So
it's
they're
ridiculous.
actually um what is acquiring
Yeah.
the raw good and not just, in the past where it seemed like there was just plenty of rollover, plenty of fun times. That's doubled.
Yeah.
That's doubled in the first quarter. After adding in the 3.6 million ounces of open interest remaining in the current March contract, 78 million ounces delivered. Wow, this is a massive. Yes. Even more stark is a chart showing deliveries on a 12-month trailing basis. No, you can view this on an annual. Okay, cool. Wow.
Yeah. That's crazy.
Wow.
Yeah, man. That's what I was like hooked on all afternoon when I was
Holy
into this.
cow,
Yeah.
dude.
I
Yeah, I
can-
am gonna have to give Grandpa a call.
Yeah,
Oh man.
call all your grandmas, grandpas, and get all the silver you can
Get
get
your
your
silver
hands on.
dollars, man. All that stuff you guys missed out on when you were a kid. Time to cash in.
Because I mean, in the end of the day, having it physically is your best bet. Always.
In the COMEX warehouse inventories and deliveries versus time. Ounces of silver date. Registered and eligible. Silver squeeze starts. Wow.
So the inventories are
down.
like
So like right here, you guys can see they stocked the hell up going into. So it seems like they were kind of expecting it. No, yeah, because it about so at August of 20, they're sitting at about 335 million ounces of silver, and then you go down 2 months, the end of October, and they're at 380. Then you go into December, 390, and then coming into January, they're sitting just under 400 million ounces. And in that short period of time of February 21st, February of this year to March of this year, halfway in, we're almost down to 370 million ounces again.
Yeah.
That's insane. Dude.
Yeah.
That is ridiculous.
Damn, I was looking at these charts and I was like, whoa.
That's kind of insane. I would love to get my hands on a couple other warehouse and inventories that house such large quantities of silver to see how this trend is doing across the board, because that could be a big statistic to have if trying to call a squeeze on this particular
Imagine the
commodity.
squeezes on the minor companies too.
Well, that's something we want to look at.
Oh yeah, absolutely.
And one Japanese company that we did on the electronic trucks.
Mm-hmm.
Yeah.
Yeah.
What was the name of that company? Man? I can't remember off the top of my head, but
I can't remember either.
As you can see from the graph and the chart above, COMEX inventories are beginning to decline at a very rapid pace. This is true. To explain a bit further, the eligible category of COMEX is silver that has moved from the registered status to delivered. It's called eligible because even though the ownership of the silver has transferred to the entity who requested the delivery, they haven't taken it out of the warehouse. It is technically eligible, become registered if the owner decides to sell it. Okay. However, the fact that it is in the eligible category means that this require higher silver prices for the owner to decide to sell. Yes. Yes. Yo, 80% cash waiting for the big boom.
Wise man, Mr. Crawford.
Yes, sir. Yes, sir.
I might have pulled the trigger a little too fast myself.
The current path of silver in futures market is that registered so much being delivered. Okay. Mm-hmm. And most Americans spending $1,400, right? If 1% of them converted to silver through the PSLV, this market could truly explode higher. April's contract open interest is trending at a record high level. Holy crap!
Yeah.
What?
Mm-hmm.
All right, so this is big. This is kind of big. it's been a sentiment even in the comment section of our still relatively fresh infantile channel, and it's a sentiment from the people then. So this seems to be something generated again from the retail investor revolution, you guys. This is something to take a serious look at on your spare time. I'll be sure to take this, Control C that bad boy, and drop it into the comments for you. Boom, beat. Yeah, I'm gonna keep going down. I see where this guy's going.
Yeah.
I see where this guy's going. He is really
He gets
making
really
a
deep into
solid
it,
case.
But I want you to stop here because this is absolutely insane. Scroll up a little bit.
A little bit, yeah.
Tad bit. There we go.
This was shocking to holders of SLV because SLV is a long only silver ETF. They simply buy silver as inflows occur.
So when you hear let's buy silver, you got to really be careful at the security that you choose, because there are some securities out there that aren't really holding actual silver. You're buying the promise of them actually holding the silver. That's where SLV is not the choice. PSLV is, and you will see, we'll go in a little detail about what they're saying here, and you'll understand why.
See, so this is something to note. This is big. Retail investors, be on the lookout. SLV ETFs are not a good place to get your silver that you want because of the nature of how futures are traded, the nature of deliveries. There's also, so long story short, what I'm getting from this is there is of course, propped up market in which there are ETFs that are allowed to trade on imaginary silver. And then there are ETFs and companies that actually buy the silver that reflects what you are buying from that company. In terms of thinking how you're going to create a squeeze, the shorts are the ETFs. The ETFs buy the physical. They turn around and sell on the COMEX.
According
this
to
was shocking.
Goldman.
Yeah, according to Jeff Curry of Goldman Sachs, you guys. Someone really you should be trusting. This was shocking to what they say to the opposite. This was shocking to holders of SLV because SLV is a long-only silver ETF. They simply buy silver as inflows occur, keep the silver in a vault. They have no price risk. If the price of silver declines, it's the investors who lose money, not the ETF itself. So there's no need to hedge by shorting on the COMEX. Further, their prospectus prohibits participating in the futures markets at all. So is the ETF shorting silver. They aren't.
The custodian is.
JP Morgan is shorting silver.
Yeah.
This is what Jeff Curry meant when he said the shorts are like he said the shorts are the ETFs. Wow.
Yeah.
Moreover, he said it with a tone like this fact should be plainly obvious to all of the dumb retail investors. He truly meant what he said. What is a custodian, you ask? The custodian of the ETF is the entity that actually buys, sells, and stores the silver. All iShares does is market the ETF and collect the fees. When money comes, they notify their custodian. Their custodian sends them an updated list of silver bars that are allocated to the ETF. Wow. So the SLV is actually not in possession of anything. That's crazy.
Yeah.
That's crazy, bro. That should be illegal.
Yeah, absolutely.
That should definitely be illegal. Hey, retail investors, here we go. Another big change in market landscape and regulations. I'm calling it here first. This will not be allowed to be legal in the next 3 years. I think this guy's onto something big. I think it's gonna catch a little bit of wind, get a little bit of gas underneath it, a little bit of jet fuel via the Stonk News Network and others in the YouTube market. And this is what's gonna happen. This is gonna get traction. People are gonna buy a bunch of silver, and some people are going to sadly buy from SLV, or rather take positions and buy equity in SLV, hoping that reflects what's going to actually happen in the market. When it doesn't, there will be an open case investigation. The SEC will have to actually do something about it because we're going to be nagging them really hard, throwing eggs at their cars, houses, leaving them very friendly letters. But yes, that's kind of going to be what goes on there. And this is going to change. I don't think they're going to be allowed to do this anytime in the near future after all of that happens.
They've already gone. They've gotten some scrutiny over this, but I mean, they're so big that they pretty much kind of just pay a a hush hush fine, and
Yeah.
it's all good here.
Yeah, see, that's going to change. That's going to change. The game has changed. Qtron. Thus ensuring that the ETF flows never actually impact the true open market trade. So exactly.
Yep.
Exactly. That's crazy.
The cycle.
Let us know in the comments, you guys, if you want us to do a little bit more of a thorough kind of report on this silver and what's going on with the silver ETFs, what's going on with the banks and the institutions that are shorting this market, and how it's been kind of marketed and is being pushed towards the retail investor in terms of how it might affect them and affect your position and essentially our investments.
Yeah.
If you're purchasing SLV, you're purchasing silver on the open market. You could not be more wrong. If you're thinking of purchasing SLV, thinking you're purchasing silver on the open market, you cannot be more wrong. Purchasing SLV is the best way for a silver investor to shoot themselves directly in the face. I like that.
You're purchasing the idea of silver.
Yeah, exactly. It's just such a propped bubble, man.
It's messed up, man. It angered me, and we'll definitely cover this more. I've been hooked on this for like 10 hours today.
Yeah. Further evidence of this theme: if banks hold the silver, the price is allowed to rise. Short SLV, let it pop first. Let's go. But if you hold the silver, the price is forced
Talk
to
Toronto,
fall.
what's up, my man?
Interesting. Oh, Talk T.
Hey,
That's Talk T. Oh, nice. What up, Talk T? He's back in the house tonight. You'll notice that as long as investors didn't actually want the silver to be delivered, the price of silver wasn't allowed to rise. Yeah. So in this instance, the opposite team would be trying to hold. I could just see the institutions all armed together in like a round robin fashion, like, hold, don't let the silver, don't let it go. Once the cat's out of the bag there, dude, it is out. The short squeeze is underway and the dam is about to break.
Filthy.
Oh, look.
Yeah, that's what I was talking about.
Yeah, they are. This guys, yeah. Let's do it.
Sweet.
Let's do it, retail investors.
Let's get her
stick
done.
it to them again in a different sector.
Their strength in numbers.
First, exactly. Ape stronger together. We hit them hard last time with GME. We're still digging down on AMC. This is now a personal vendetta of mine. I like this. Waiting for Dr. Berry's second prediction to come true. Crash. Tim? Talk to you. Elaborate a little bit more on that in the comments for us, bro. Let's see. For JPM, the bank's involved.
Short Tadao.
Yeah, Tadao. Yes, sir. We appreciate you, brother. We are in this together, man.
Absolutely.
This is crazy,
Yeah,
bro.
man.
I love this. Dude, I'm going to go back up to the top really quick, you guys, and do what you got to do as a contributor to the marketplace. Upvote that bad boy. I wish if I had a little bit more karma on the old Reddits, I would have given that man a gift, but I don't really know what's going on. This looks interesting.
It's funny that you wouldn't have karma.
Yeah. ETFs and ETCs storing silver in the LBMA London vaults. Okay. Ooh, some of our favorite guys: J.P. Morgan, Brinks, Malka, Loomis. Gotta love the taste in that mouth. Tastes like crooked. Interesting. Further exacerbating lack of trust one should have in these ETFs. Yes. Unlike COMEX that has regular independent audits, the LMBA isn't required to have independent audits, nor do independent audits occur. I'm not saying the silver isn't there, but why not allow independent auditors in order to prove more confidence? Yeah, this is just screwed.
Oh, it's disgusting.
This is screwy.
I had to take like 3 showers today after going through this.
Yeah, man.
No lie.
Yeah, I feel soiled. I feel soiled just reading it. Alternate plays with more risk and potential reward include silver miners, silver miner ETFs, and call options on these silver stocks. Well, if y'all are in the game of doing some YOLO action, I think this is a place to do a little bit more DD and press your Doomsday YOLO button. Cue the Drake and Lil Wayne track. The motto. Whatever you do, don't buy any silver ETFs that aren't PSLV. So, I'm long PSLV and other silver plays. I'm also a random guy on the internet, and this entire post should be regarded as my opinion. Of course, not financial advice, you guys, but something to check out. We will cap this live stream with that for you all today. Thank you
PSLV.
so much for joining us, you guys. We appreciate you a bunch. If you liked anything in today's stream, be sure to, share, like, hit the subscribe button, email us to your grandpa. Let him know what's going on with the silvers and the silver markets and how you can maybe potentially make a play and make some money and hold some more bags that won't actually be made of paper this time, rather coin and silver. I'm your host, Bill Steele.
But my Sharif.
That's it for us today, you guys. We will see you tomorrow. We will be live streaming again. We kind of have a morning routine where we're meeting with our analysts, getting what's kind of the most pressing subject, getting a little bit of briefing on it, doing several hours of DD, not sleeping, getting the news out, getting you some real stuff. Be on the lookout, you guys. We have some merchandise coming, a lot of exciting things. Thank you so much, you beautiful retail investors. We'll see you tomorrow.